This little pocket anywhere in here is probably a buy. I kind of want to. I want to see this break where they fire back to the upside. I can get my mic over here, and then I'll come in with some calls. Let me share this in Discord. I think we might have another down day tomorrow, honestly. We got a Twitter live. Who's this?
Everyone that we're meeting.
I'm bored. Mike.
If you're able to share out the space, please go ahead and share it out. Thank you to
This is the spaces I do all the time, by the way, guys.
Those that are going ahead and giving it the retweet, the quote tweet. Thank you to Gary for doing that as well. Looks like we have a pretty full panel.
I think you missed one of the retweet there.
Well, you know, I didn't shout out my Wolf account retweeting it. Okay, come on. Thank you to Evan though for retweeting it as well as the Wolf account. for retweeting.
You're welcome. I got you, dude.
Make sure you're following the Wolf account. Absolutely, if you aren't. Anyway, with that being said, what a day in the market. We've been waiting on one of these days. Had to know it would come at some point. SPY back to levels not seen
Rebound
since yesterday
or
morning.
plummet?
Absolute terror in the streets.
So
Nvidia.
Wolf, we've been talking about it today on that. Look at RSP. This is the one, the equal weight SPY that every single bear has been like, look at that. And today's like the first time we've looked at it.
What are you talking
and
about?
It's actually doing
The
good
market
compared to
overall?
the index. And you wouldn't.
SPY.
Yeah, and do you know
SPY?
the advancer decliners? This is like 20, 30 minutes ago. Guess how many stocks
neither.
are advancing today versus declining?
Oh, I saw you tweet this, but I don't remember off the top.
2,400
I don't think
advancing,
either.
400
I think,
declining. This is
You're going to see the market go a little lower,
That was on the nice.
but I don't think it's going to plummet.
The good news
I
is that
think-
most of my competition portfolio is in the ones that are declining the most.
Mine
So,
too.
I think
What's
we
gonna-
hold
What's going to
56,
happen to everybody
100.
who's screaming, this is it, this is the sell-off tomorrow?
but I think we go back and
this
test
is it.
5,600.
Armageddon.
Yeah, and tomorrow they're going to be
I don't think it's going to
oh my
happen
God,
really
maybe Bill
quickly. I think
Gross
it's going to
shorting
be
Tesla.
over the course.
Nvidia retraced its 21-day
So
yesterday,
that-
just bounced right off. Back to all-time highs tomorrow. That's what's up. Tesla is down 7.14% right now today, back to the top of my value area high that I have on it.
If we can't hold 56, then you'll start to see vol
July, which
really
is 1
juice
week
up,
ago.
and then there might be some
I will tell you,
opportunity to the downside.
Is there any
Okay.
is there any other sign that's better than Jim Cramer coming out yesterday and saying that Tesla would be a $1 trillion?
I don't think it's actually
company,
56.
and
The
today it
exact
goes down
number
780.
was
I mean, that's a key indicator of
59,
Yeah, but why they go down there?
89 or
because Jim Cramer said it
something
was
like-
going to be
No.
Robotaxi.
And I don't like Jim Cramer. I think Jim Cramer in his day was incredible, right? He helped a lot of people.
It's a
But-
big old jinxer.
Up 11 days in a row, and then you say we're delaying the robotaxi announcement for 3 months? That's an easy sell. That's an easy sell.
I think the fade Kramer inverse Kramer thing is funny, and like I participate in the joke too.
Yeah, no,
But,
what do you
like,
think?
Realistically, during bull markets, he's right about a lot of things, just like everyone else is.
I said
The
59,
inverse Kramer
59,
thing got
89, I think, is
popularized
around
during
that spot where we
2022
broke out,
when
and
everything
we've
was
now gone
settling
another
except for
almost
oil and
100
gas.
points higher. I
So
think
all
we
of the stocks
chop
that he
around
made
here,
were
but
selling
work our
off.
way
Like,
lower to
all of the
back
stocks
test
that
that
a
over
lot
the
of
next few
people were
days.
selling
Yeah.
off in
And if
2022.
that holds,
I
then
think that
then
they
higher.
kinda created
And if
this
that
sort
doesn't
of, like,
hold,
dynamic
yeah,
where,
if that doesn't
again,
hold,
I'm
then
good for
then
fun
there's
about,
going to
like,
be
for
some
me, like,
good
I'm
up.
a party pooper, you're like,
Yeah,
yo,
we might have a
I'll
chop
be
day
like, oh,
tomorrow.
inverse Kramer, it's cool, and it's fine.
But
Whatever.
IWM
He
might
does make
continue to
sense.
rally.
Like
Talk,
everyone else.
confirmed Kramer lover. out here.
No, I'm not even saying that. I'm not even saying. I'm just saying like everyone else in a bull market, he's right about a lot of things. I mean,
except
you could have thrown gum at a wall over the last 2 years, and it probably went up. Like, you know, so
his fund
reality is
doesn't beat
he's
the S&P.
been right about a lot of things, and he's
But
been
his-
wrong about a lot of things, like
but
most
his-
of them. You know.
Yeah, but his fund doesn't beat the S&P. If his
Yeah, no, that's true. If you're gonna criticize his charity portfolio, I agree. He's not
Exactly.
an excellent stock picker by any means. I'm not saying like Jim is a world class trader, but what I am saying is that like
he
the
knows his
inverse
stuff.
Kramer thing was only really funny during 2022 when like everything was going down and it was easy to be like, oh my God, Jim, you said to buy that stock and it's down 30% now. Like that happened to a lot of stocks.
Well, and here's why I mainly make fun of him. Last week, or it was maybe, I think it was in May, he said, I'd rather own GM than Tesla. Tesla takes off. And then yesterday, he says it's going to be a $1 trillion the next $1 trillion market cap.
I don't think that's what he said, by the way. Yesterday he did an analysis.
Let's be
It was
clear.
an analysis of the next 10
could be
companies.
one of- sorry, it could be one of 8 possible next $1 trillion companies. I'm not trying to help him, but he did say possibly one of 8 the next $1 trillion companies. Let's be real.
I mean, and let's be fair. Jim's highest conviction stock is the stock of the last 2 years, right? I mean, his favorite stock ever is Nvidia. He named
Apple
his
and
dog
Nvidia.
Nvidia, right?
Yep.
If you inverse that, if you were like, oh my God, Jim Cramer named his dog Nvidia, I'm going to short Nvidia, you would have gotten slaughtered, right? So it's like, I mean, look, the guy's wrong about a lot of stuff, but he's also right about a lot of stuff, just like all of us on the panel, and just like everyone in a bull market. So, I mean,
The core
yeah,
issue,
again,
though.
it's fun, but I think the inverse Kramer thing at most is just fun.
The core issue, though, with it, and I pinned it up in the list above, I'll ask Stock Talk questions and he'll give me the answer, I don't know, or whatever. Jim is a little more resistant to do that, and he'll give his opinion on everything. That's kind of more the issue.
But he has to, right? Like,
he has to. No, he
people
doesn't.
call into Mad Money, and they're asking about stocks that he might not have any idea about, and he's reading a one-pager that his producers give him and making a judgment call based off that. Like, if all of us on this panel had to give our opinion on 500 stocks a week based on a one-pager, we'd all be pretty wrong about a lot of things, right? So, I mean, like, you got to be even-handed about it, right? He's an entertainer. He has to comment on these things, right? Like,
Except
part of the game.
He doesn't present himself as an entertainer. And CNBC does not present himself as an entertainer.
That's fair. That's a fair criticism.
That's
a fair criticism.
You know, there's a lot of problems. I don't mind Kramer. The guy is incredibly smart, and his ability to pull up numbers and no charts and no companies, incredible. What I have a problem with, and all of us who are speaking on this panel know this, I don't care who you are on this panel, and you're right, 100%. We all get things wrong. The problem I have is that anybody that's listening on this panel, all of us get things wrong. And so you should never follow us into a trade without doing your own research. And we're, as a podcaster, I am super careful about, hey, I just bought, like, I sold Tesla today. Do I tell people to sell Tesla? No. If you're convicted about that stock, stay in the stock. I had several reasons to actually sell it. I bought NVIDIA yesterday. I'm down, 5% today? I'm continuing on that trade. I believe in it long term. Should anybody have followed me into that trade? No. The problem I have with Jim Cramer is he starts this investment club
God damn,
that actually does triggers and charges people $700 a year and says, we just bought at this price, and then gives you a detail of that. And it's basically one of those texting services that I have a problem with. So it's a little
We ought to hold that 1650 level.
I thought it was funny. I thought it was kind of interesting. It always seems to come up with him. Always.
Not all bad, but
Yeah, Mike?
Put me in, coach. I'm ready to play. Let's do this. I'm jacked tonight.
All right, then I will end the Kramer conversation by saying there are many people in this world that are very good at TV. There are many people that are very good at stock picking. There's a very small overlap. All right, options, Mike. What are we thinking in regards to this?
Thanks for the
today?
compliment.
Oh, well, I mean, point in case, Stock Talk Weekly. Options, Mike. What's going on?
So I just want to start off here. So today has been a very interesting day in the market.
Crap, man.
For me, I told all my members, I did a video before 6 o'clock this morning. I said, beware of a big pop on a good CPI number, because I thought it was built in off of yesterday's action. And that meant was we rallied hard yesterday into this, and it felt kind of like they were front running it. There's nothing, in my opinion, there's still nothing wrong with the market. The SPY is at 33 million shares traded. It's not huge volume. It's, breadth is on the New York Stock Exchange. We're still plus 1,800. I mean, that's just incredible. We've seen a rotation. Financials soared, energy soared.
Did you get out of your IBB,
we saw
or
some
did you keep
rotation
them?
out. We have bank earnings tomorrow morning,
I kept
and we saw tech get hit. For me, let me try something different here. Let me tell you how I traded today, and maybe this will help you guys. So, for me, it started off pre-market with that CPI number, and I grabbed a couple trades on the ES early, and I made nice money on 2 trades. I will tell you, I took a loss on Tesla. I traded Tesla. I tried the 275 calls. I took a couple $100 loss on that, got out. Tried to do AMD, made scratch. Made some money on the TQQQ a couple times, and I took off a loss on Amazon, where I bought the 210 calls a couple of days ago and said, okay, this is not working. It's time to get out of this, because I love that chart on Amazon. I think that's going to run. Just the last couple of days, not so good. So when I look at today's action, I think to myself, is this bad? No, it's not bad. It's what we've needed. We've needed this kind of down day. We haven't had a down day like this in forever. The SPY is not even to the 8-day. The Qs did hit the 8-day and went through it. Tesla got shellacked, but Tesla was up 11 days in a row coming today, and it was up 12 days in a row until it reversed. by the way, to my Predictogram friends, that was a great, easy call to put there on the open on that one. And the market's just saying, okay, we're taking some profits in these names.
I
We have
closed
PPI
out my
tomorrow. We
Russell
have earnings
position
season tomorrow with
way
3
too
banks.
early.
We have JP
I
Morgan,
should
we have
have
Citigroup,
waited.
we have Wells Fargo. They'll set the tone for the financials. The financials up big today. Everybody's thinking they're going to be great. We'll see how that goes. You see small caps today up big. You see the market here saying we think we're going to have 3 rate cuts this year. I think that's still aggressive, but it's still very, very possible. And I look at this market and say, okay, where do I want to own here? And what I decided here today is after the first hour or so, I was like, okay, I did not see this coming today. I got out of the way. And a lot of people always say to me, oh, you have to get short. You don't have to get short. There's a time to get short. There's not a lot of volume here. Every time we've dipped in this market on these big names, they've come roaring back after the first hour or so. I didn't want to short.
Timothy.
So instead, I said,
Let's
I
go get Mr. Timothy.
I played a couple little bounces on the Qs with the TQQQ.
What the heck was that?
And then I said, I'm good. I'm green on the day. I've made my money for the day. I'm okay. And let's see what happens here. And I know a lot of bears would be screaming out there, and I get it. I'd be screaming too. I mean, we're overdue for a pullback. I would personally love a 3 to 5% pullback in this market. But I don't think anything's changed here overall. I think this market remains the same. I would not be shocked if tomorrow we buy this all back. And thanks for putting me on first, Wolf. I just wanted to get out there and I'm jacked.
No problem. Good to hear from you, Mike. By the way,
we were talking.
Yep.
I was the part about this being healthy is a very true thing. The names that have been ripping aggressively have pulled back, and pretty much everything else is up today. When you look at Qs down whatever it is, and then you look at the advancers decliners, it is telling 2 very different stories. And nothing goes up forever. Just like
Looked at FXI, Josh.
But most of the time it doesn't.
100%.
But
You're
I can.
absolutely right. It's exactly what we're at.
Yeah, look at FXI. Tell me this doesn't look like a very large month-long consolidation period about to break out to a new high.
Dimitri, hear a little bit about what's been going on around the world.
Hey Wolf, how you doing? Great to see
Weekly is weak,
here.
but it can reverse.
Good to be on. I have had a really busy day this morning. I had a
Monthly's
call
about to fire
with
to the upside.
to speak on a panel on the energy
Oh
transition.
my.
The nice
Oh
rise
my,
at
oh
6
my, oh
a.m.
my.
Here, and then I have our talk at 12, stock talk. It's tempting. Weeks occurring.
Makes me think maybe Baba, Baidu, maybe Diddy, or not Diddy, Didi, what's the other one? Neo, some of those types of plays. And be scrapping around in there. There's a small one called, they do telecommunications. Is it IQ maybe?
In my view, though, what I think is going to happen is that the market's
That's really beat up, like real beat up.
The economy is going to continue to tank, and I think that's actually going to be very good.
I don't think that's the ticker.
Like a little bit of data to back that up.
Let me see if I can find it. Yeah, IQ. How does that chart look? If China in general gets a little more pronounced.
You're already seeing that in revised GDP.
No, I'm setting this up right now. 1 second.
Let's just stick to the U.S. context. As far as the macro outlook goes, 4 out of the 5 months we've seen downward revisions for job figures. In the meantime, part-time employment is actually up over 330,000 jobs, while full-time employment is actually down about 650,000 over that same period. There was a study done at Vanguard that showed a pretty big disparity between lower income and higher income workers. So according to their data, the hiring rate for workers earning
I tried to put that trade on in the wrong account.
annually,
Oopsie.
1.5%, which is actually above pre-pandemic levels. And that trend seems to have been somewhat consistent with labor market growth in low-wage sectors like leisure, hospitality, retail, etc. In contrast, though, the hiring rate for employees earning more than 97K has actually slowed to 0.5%, which is actually less than half the peak it reached in around mid-2022. And I think that actually marks the lowest hiring rate for that specific income group in the past 10 years, actually. So going back to 2014, obviously excluding the early parts of the pandemic. and I think we are going to continue to see a slowdown. So in June, U.S. services activity contracted actually apparently at the fastest pace since 2020. The ISM services PMI index fell about 5 points to 48.8. And what I think is going to happen is you're going to continue to see weaker economic fundamentals, but what that's going to end up doing is actually prompt rate cut bets, because you're going to continue likely to see inflation fall, barring a sudden supply disruption to, let's say, energy that can shock prices higher.
I bought out in September. I already have a long.
You're going to see that then reflected in weaker consumer data.
I'm already long FXI from lower prices, but I did a trade in IQ as a China play because it's one of the most beat up out there. I bought the 550 calls in September for 9 cents a piece.
Whoa, I'm hearing like 12 people at once. I can still hear.
Oh, Stock Talk, are you off your meds?
No, I can
You gotta drop and come back. Probably happens to me all the time.
I can hear like Evan and Gov and Dimitri all talking at once.
You're dumb.
Nice.
He left, so that's not funny. Unfortunate.
There might be something in Billy
Marco, you got
too,
thoughts on some of, do you pay attention to a lot of this?
which is kind of their version of.
I don't.
Yeah,
but
see,
I got
Billy
a lot to
looks.
say about today's
Look at
market,
Billy
I'll
too.
tell you that.
Okay, well, let me get Stock Talk back up.
Yeah, I am on.
See if he has
Yeah,
thoughts first on this side, and if anybody else does as well, feel free to
Yes,
raise
sir.
your hand.
Yes, sir.
And we'll come over to others on today's market. Stock Talk.
Oh,
Yeah,
Go to Fairfield Inn and Suites.
Remember we had that attempted coup in Bolivia a couple of weeks ago? So it turns out,
Good
I'm just
times.
gonna make a little bit of a bragging point here. Yeah, good times, right? It's going to happen more often.
Are
Actually,
we short enough? I think we are.
There are fewer coups in the world, but the times that they do happen, they actually have a higher success rate. So it's a really interesting dynamic. Anyway, but about Bolivia, as I had thought about it, it made sense because it was about lithium. Because Chile, Argentina, and Bolivia collectively have 60% of the world's lithium reserves. And they're thinking about forming like a lithium cartel, but it seems that motivation was driven by a desire to be the head of state and specifically to secure, I don't know, some more of these resources for lithium. Anyway, so that was pretty fun to forecast. Obviously, terrible that almost happened, but yeah, I thought that was an interesting point.
got it. Stock Talk, you able to talk now?
Yeah, I don't know what's going on. I was like, I heard you ask me a question, and then I just heard like 12 voices at once. I didn't hear anything Dimitri said, so if it was about something that Dimitri said, I apologize. But yeah, the audio was fucked up.
The last part there was on
the TLDR.
Yeah, please.
Yeah, I mean the TLDR. Yeah. The TLDR is we're going to get likely a weaker economy, but that doesn't mean the market will go down. That actually could potentially give it a boost because then it'll give the Fed impetus to cut rates.
Yeah, I mean that rationalization I think is on point. I mean, the other side of the coin is really that doesn't happen, right? And I think the difference is the magnitude of economic slowdown. And this is kind of what we talked about. Which PPI was it? I remember me and Logical were kind of discussing this on the panel and debating it. Logical, was that the last PPI or?
Yeah, we were down. It was minus 0.2% month over month instead of
and we were kind of talking about the idea of like, when do you know that markets are panicking over economic slowdown versus using it as a measure of the imminency of rate cuts? And the truth is there's no objective way to measure that, and I know like people who are in the audience or might be new to macro like hate hearing that, but it's not. It's different from cycle to cycle, and you can take cues from parts of the market as to why that's happening. For me, I like to look at the bond market, right? I like to look at the 10 plus year yields, 10s, 20s, 30s, and ask myself, is the bond market as a result of this data? And by this data, I mean whether it's a weak labor print, a cool inflation print, is the bond market saying this means sooner cuts, or is the bond market saying this means recession? Because sometimes it looks the same, right? But for me, when I start seeing equities and yields detached from each other in response to those data points, that's when I start getting concerned. And we've had blips of that throughout the year, but usually the correlation has ended up recovering, and so that kind of quells my concern on that end. But when it comes to labor data, look, the type of CPI we got today, where you're beating by 10 basis points in multiple categories, that's what the market wants to see. Okay, and I know people are like, well, the market was down today, Stock Talk. I think that that's a super umbrella statement to make. The Qs were down today. SPY was down today. IWM, KRE, XBI. I was literally texting Logical about this last night. I was like, hey, in the second half of the year, I want to have more mid cap exposure because that's where I think the money flow is going to go. I'm always the first person to say one day doesn't make a trend. So I'm not doing a victory lap here because of one day of this type of action. But I wouldn't be surprised to see more of these types of days in the second half of the year because A, small caps have lagged. B, these indexes are much more rate sensitive. And C, if the economy doesn't deteriorate sufficiently, then they also have the business backdrop to perform better. And another concept we've talked about repeatedly is this idea of looking left. Whenever we get into earnings season, I think that's probably my most used phrase, is that I always tell you guys, hey, look left, look left. People get astonished why their stock's down 30% on earnings. And I'm like, look left. Most of the time, that name is up 80% year to date, or up 110% year to date. The expectations are sky high. And so, I do expect small caps to outperform. I think it's the place to be. I think you should have some exposure there. I'm not saying to sell your Mag 7 stocks. I'm not selling my Amazon or my Google. But what I am saying is I think it makes sense to have some mid-cap exposure because there's a good case for them to outperform. Now, when it comes to Dimitri's point about what level of economic deterioration is sufficient for rate cuts, I think you need to continue to see these incremental beats, right? 10 basis point beat on headline and core CPI, 10, 20,000 jobs under what the expectations are. That's the type of incremental beats that you need for the market to say, hey, look, the economy is deteriorating enough to keep the concern of economic fear present in the minds of the FOMC members, but it's not deteriorating enough to signal an impending recession. And that fine line is where we need to operate for the next 4 or 5 months if you want the equity rally to continue, if you want this rotation of small caps to continue, and if you want the yields, not the yield markets, the bond markets to stay intact. If you want those three things to be true for the next 6 months, and for this whole party to be able to continue, you have to continue to see incremental deterioration in the labor market data and incremental beats on the inflation side. You don't want to see inflation cave from 3% to 2%. That's not going to make anybody particularly confident about the economy. What you want to see is us inch down, on a quarterly basis, and for the overall trend to be in disinflation. And after those spooky first 3 prints of this year, I think last month's PPI and this month's CPI are so far signaling to us that we're stepping down the stairs thus far. Could that change in a matter of a single print? Absolutely. But I'll cross that bridge when we get to it. Being a speculator of the macro economy is a fool's errand. Don't let anyone convince you otherwise, including all the doomers that are on Twitter. I know there's a lot of them. Do not let people to convince you to speculate on the course of the macro economy because no one can do it. Not the best economists in the world, not hedge fund managers with 30, 40 years of experience. None of them have been able to do it.
Only one man, and his name is Jim Cramer. No, I'm just kidding.
Yeah, except for Jim. Yeah, exactly. But I agree with Dimitri's points. It just depends on how incrementally that happens, I think.
So, Stock Talk, to your point, the Fed did say we would consider moving rates if inflation moved sustainably lower. And I've been a stickler for that term precisely because, like you said, markets would actually panic if inflation fell that quickly because they would think what it could possibly have gone so wrong that it would fall this quickly.
Yeah, I mean, Powell even said that yesterday, right? I mean, Powell was, those who didn't listen to Powell's testimony yesterday, Powell was asked by a congressman, hey, will you wait for inflation to get under 2% before you cut? And immediately, he didn't even hesitate. He goes, no. Well, we won't wait for that because if inflation does come under 2%, we have to assume this is a trend-based mechanism and that it's going to fall a lot further. So he explicitly has said in a congressional testimony, we are not going to wait for it to get to 2%. So, what does that tell you? I mean, we're at 3 today, right? You know, if you see the mid 2s on these headline prints, the Fed is cutting. That's my view as of today. You know, he explicitly said that. And so, yeah, I think, look, they're gonna monitor how quickly this happens. If next month's inflation prints are 20, 30 basis points below where they're expected to be, you'll get an imminent cut. You'll get a cut in September, in my view. And markets, as of today, really obviously up the probability of that. That's no surprise to anyone on a cool print. But yeah, I think that's what you need to see. And you know, hopefully the labor market can hold up in the meantime. I don't see any enormous red flags, but to Powell's point, and as we've seen in the data, the labor market has softened somewhat. It's just a matter of keeping that
URBN bot is giving bullish signal on URBN.
Drop off. But anyway, I see we have some hands. So I think Logical's hand was first, then Monative, and then
There you are.
Nah, Monative,
Yeah, I'm a great one.
Oh, okay, there you go. Monative was first. All right, Monative, you're first. My bad. I didn't know who was first.
No worries. If Logical has a short point, you might as well make it. I'm gonna rant a little bit, so Logical, go ahead.
No, I'm gonna rant. You go ahead.
Okay. So here's the deal. Okay. So all of the Fed,
This can't be the
GDP
same stock.
forecast,
I traded this
right?
stock when it was
St.
like a
Louis,
couple dollars.
Atlanta and New York Fed.
It was in the
2%
teens
under.
back in the
So
day.
we
I feel
are
like it was below that.
effectively below potential
Look at
already
these
in the
huge
U.S.
peaks and
economy.
troughs of
Okay,
this name.
we have
For
inflation at
years,
3%.
this thing just goes up
The
and
Fed funds
down
rate
and
at
up and
525,
down.
550 basis points. So we are 250 basis points above,
Mrs.
inflation,
Mrs.
and we are
Beats, what the
well
fuck?
beyond normal restrictive territory. We've come to a
It
point,
looks
and,
like
and we
it
are
is
at what,
about to
4.1%
break out and make some
unemployment
new
rate,
all-time
and we are
highs.
continuously printing over 200,000 in unemployment. So if you wait further and further and further and further, then you basically are going to just break the economy down completely. We are already in that progression, and then you're going to give a rate cut to basically revive an economy, whereas you should really be acting now and taking off a little bit of the
What did you end up?
restriction rather than
What did you come up
keeping
with in
so
China?
much
I
of
just
your
bought
step
FXI.
on
I
the
didn't look at
neck of the
IQ. You want me to look
economy
at IQ, didn't you?
and actually trying to
I mean, I
force it
really
to
like
break
Neo.
down
I felt
completely.
Neo's been suppressed for so long. When it
Employment
goes, it's
doesn't
gonna
change
go,
on a
dude.
dime. It's a path
When
that
it
it
goes,
takes.
it's
It's a
going to
progression
go.
that turns
IQ doesn't look that great.
after, it's
No,
it's
the
like
daily
turning a
looks
ship.
okay.
It's going to keep going in that direction of
It looks
increasing
better than Neo.
unemployment for a while after rates start getting cut, and it's
Neo
not
is
going to
beach
stop
ball
on a
underwater
dime.
effect.
It is already
Yeah.
either too late that we are going to
Is
hit
it?
this
Are there?
progression of
Is there a lot of
an
premium in
economy
the
that can
options?
move
IQ
down
is
maybe
firing to
a
the
quarter or
downside
two
on the
from
weekend,
now,
though. I don't know.
or we are getting
That's the
there
thing.
really fast.
Neo
I'm
has
not a
cheap
big believer in
options too.
Channel, especially when we are against a
already
lower
bought my
base
Neo.
than historical.
What'd
We're
you buy
still
in there?
full employment. All those are good things,
I
but
bought,
those can change fast. If you take last quarter's numbers,
$5 calls for
the
September.
quarter numbers were good. The guide was
Down
That's what I'm
3%.
buying. You
compared
can't
to
buy
previous
that.
Or down
quarters.
5%.
That means business
You
is
can't buy that.
starting
I
to
just bought
feel
those.
the
You
pinch, and they
put yours back.
they don't have the confidence to up the
I
guidance
bought it
like
this
they
morning.
did
You copied
2 quarters
me.
ago, 3 quarters ago.
You're down
If that
3%.
trend
I haven't even entered yet.
continues,
So nanner.
then the
Well, I was down
business,
5. Now I'm down 3.
landscape is going to change
All right,
quickly,
I'm done in
and we're
China. I
going to
have too much
feed
China on. I
on,
just put on. I put on
uncertainties, and the
like
business is going
100
to say, you know what,
contracts of
I want to
the
pull back
that little
here,
tiny
which
kitty
feeds
stock
on to,
IQ.
GDP forecasts, which feeds on to
I normally
employment
don't trade that
forecasts.
many
All of those
contracts,
things
but
change.
they were like a
And
dime
those
a
things
piece
change
or
fast
less than.
after a certain point. We are now in this period where we can experiment a little bit, but the wiggle room that the Fed had 6 months ago, they don't have anymore. They are getting very, very, very fast to a point where they will be forced to cut because things are bad, not because things have normalized to a point that they can, take the foot off the neck of the economy. And that is the problem.
Ooh,
We
I had a
don't know where
business
that is
comfort
yet,
ride. I
but
didn't
the
even know that
Fed
was a
wants
thing.
to think that it's far away. At least the statements they keep making is like we have
Should've offered to
infinite
shine
amount of
his
time to
shoes.
get to this mythical 2%, which makes no sense whatsoever. Anyway, I'll stop the rant here, but we're still. What remains to be
Right back,
seen this
Mike.
quarter is how the guidance looks. If we have 2 straight quarters of
We haven't done
guidance
that in a
starting to
while.
weaken, you're going to lose business confidence. You lose business confidence, you lose employment. I mean,
All right,
basically,
it's
growth will go down
3:34. It
drastically.
is
You lose
time.
JOLTS data. Even current JOLTS data is completely
Why is
stale.
he still
You go
talking?
look at companies' employment, open positions, and then ask them directly what positions they are hiring for. There's a vast disconnect between what positions are open officially and what positions are being actively recruited for. It's a fraction.
There we go.
So where we get to that point is up to the Fed, but they're constantly talking down this economy and it's starting to work. And that's the problem.
Illogical.
Yeah, alright. So I got a lot to say about today because it is my favorite day year to date in this entire market.
I think we
And
probably
it's
would have
not
been
only
better
that
off with the
my
6
portfolio
strike
is up
in
almost
Neo, to be
5
honest with you.
days. It's been nuts this year. When you're a small cap investor, that's the kind of stuff you get because the names might not move for 3-6 months and then all of a sudden move 30% overnight, like Clearpoint Neuro this week, for instance. Today is my favorite day in the market because of the obvious rotation. Evan, talked about it earlier. Advancers, decliners, their equal weighted S&P. Look, I'm not a QQQ hater, but QQQ has been eating very healthily for like this entire year. And this last month, it's been absolutely berserk. So like I'm happy for everyone with their gains. I feel like though
It's up like 100% off the lows, isn't it?
Dude, it is absolutely absurd. I'm happy for everyone, right? I still own some Amazon. I'm cool with that. But that said, man, it's just like so much of the market has just been left for dead. The bears have been nonstop saying, "Hey, breath is horrible. Breath is horrible." Every time I saw a post like that, I said, "That sounds bullish to me." Because that just means that you have so many stocks that have yet to participate if this is a true bull market. And of course it is a true bull market. That's not up for debate. And so today, seeing IWM up so much, yes, it's going into a little bit of resistance here. But in my opinion, what happens whenever you keep knocking at the door of resistance? Sooner or later, you're going to break through. And the difference of today versus other times was that it's actually being led by macro data that is actually changing the environment. I know we talked about how IWM is a pretty crappy index, but that's exactly the point. These companies actually need lower rates to lower their interest expenses so that they can continue to operate, so that they can increase their margins and increase their profitability, because under a high rate regime, a lot of them are going to show up unprofitable. So if we do see lower rates, you're going to all of a sudden see a snowball effect in the EPS of the IWM and small caps in general. So to me, I pressed the bet today. I added calls, I added IWM calls, I added XBI calls. I mean, people will say, why would you add on a day like today? Because I feel like this is exactly the time when you've gotten some sort of confirmation, and I'm just, feeling like I'm going to feel silly. I do have a lot of exposure to small caps via individual names, but even then, like my portfolio was up probably the same as IWM today. So I felt like it was a good opportunity to say, hey, look, it seems like just given off today, obviously one day doesn't make a trend. If IWM really gets going, it's going to start really going. And it does really look healthy on higher time frames. So yeah, I'm really excited. But yeah, just looking at individual stocks today, personally, I felt like today was a buying opportunity. Why do I say that? Is because there are companies like Affirm, for instance, who should be extremely rate sensitive. And I mean, it's having a decent day. It's up 4.8% on average volume. To me, though, for a name like that that's down 45% year to date, and it's extremely interest rate sensitive, that to me screams opportunity, because we're clearly headed into a better environment for a name like Affirm, Lending Tree, Rocket Companies, Lending Club, etc. So for me to not see these companies up 10, 12, 15%, and I know people will say I'm
20,
delusional, I'm
20
not.
times. No, it's more than
That's how
that.
these things move. They're small caps, they're financials,
20
high beta,
times
right?
20
We
times
wouldn't
4
even
is
bat an eye if the
$8,000
firm was down
in
13%.
just them.
Literally no one would care.
And
But if I come out and say, you know, a firm should be up 13% today, people will say you make no sense and you're delusional. But my point is just saying that we have yet to see this real move, and that's where I'm at right now. You know, I've been talking about it for 6 months, and in my opinion, this rally is 6 months overdue. IWM is sitting at 0% returns year to date. It had its worst start of a year, first 6 months of in history versus large caps. You know, I've been talking about the relative valuations from large caps and small caps. I probably sound like a broken record. I come on these spaces every single day, and I say, hey, you know what? Going into these prints, like, I feel good about small caps. That's why in Q1 you had a lot of disasters. You know, Stock Talk mentioned, why is my stock down 30%? It's because you were up 80% going into the print. Go look at small caps. A lot of them are not up that much going into the print. And I did not have a single bomb going into Q1. And so I think that what is really, really, really important about today is that the sentiment begins to change and the rotation begins. And as people have been extremely underweight, cyclicals have just been absolutely brushed to the side. I mean, come on, look at the SMH.
Neo's up.
Go look at the
I'm up
7.
on the
Go look at
trade.
the semi-trade.
2%, Josh.
Every
Should I cut
manager
it?
on Wall Street is piled into those things. And so I think right now it's going to be the catch-up trade. And if you're not getting there quick enough,
No,
you know,
too
you're
soon.
last, and you're going to all of a sudden be chasing. And I think that's going to even push us further. So right now, I just feel like it is such a sweet spot. There's no point in even me going through all the names that I look at in my portfolio. They have just been absolutely stunning. Aspen Aerogels today up 8%, now at $26. I kept talking about that at 23 recently.
There you go.
Rocket
Unity's
Lab
coming
up
back,
like
baby.
20% since I've been
Oh,
talking about
shit.
it in
We're
this
going to
space.
rally
Just
Unity up into the
completely
close, and then we're
freaking
going to gap
out.
up
Another one
higher.
from Shai Jumia, just very strong today. Now at 1244, just keeps going up every single day.
This seems too good to be
It's
true.
just been insane.
I'm getting worried.
Uber up today on the Tesla robo-taxi delay, just straight up spiked, held that, and then made new highs of the day after the fact. I was certain that we would have faded that move, but alas, we didn't. Despegar.com was weirdly red today, but it is almost flat on the day now, has completely recovered. I mean, this is strong action. Just, I'm speechless.
Oh, I'm up
but
3% now.
At the same time, this is what was expected, and I've just been waiting for this moment. And so yes, I pressed the bet today. I added, you know, IWM calls.
This is a fun game.
Plus out. I added XBI calls.
You're such a dork.
And you know, I just feel like if this is just, you know, if this is giving us the signal that rotation is here.
I'm bored. Okay.
It's not a one-day thing. You don't reverse a trend like this when you have the data that supports it. So, yeah, I think we have a long ways to go for, you know, really to see that rotation take place.
There you have it. The small cappers back in town. Good points there from Logical. Want to make sure we keep getting around, get everyone on the panel involved here. Going to come over to Gary and George next, but of course, if anybody at any point you want to get in or you're running, you know, I got to talk now because I'm going to have to run, you can always just raise that hand. I know we got to get to Falco and Sniper and Brett and a bunch of others here too. So, yeah, a lot to get around. Well, there you go. Falco's got his hand up, so coming over to him.
Yeah, thanks, guys. Sorry, I have a meeting at 2, so I have to make at 2 Mountain Time. So, yeah, today pretty exciting with the rotation. And I know a couple people on the panel have talked about everyone wanted to see rotation.
Damn dumb rides that don't pay what they're worth. Go kick rocks.
He says he's buying Tesla calls. Oh, snap. Don't do it.
I'm gonna do it.
Ooh, Uber ride. Okay. Dead.
Bro, I always forget I'm live on YouTube, man.
Hello, how you doing?
I always forget I'm live on YouTube. Guys, I bought Tesla calls for September. My bad.
Just lining up. Oh, not as crazy as I thought it would be, but it is kind of crazy. There's a summer crazy, if that makes sense. For this, yeah. College is also down to one lane. Yeah, right at the light. They still have it one lane, so everybody trying to get to Atherton gets funneled into one lane at the end, and it just backs everything all the way down College up.
Oh, I forgot PP Ice tomorrow.
I don't know what they're doing. They've got the light a blinking yellow light now. It's not even a red light anymore down there.
I might swing some crazy calls for tomorrow. I might go for a lotto tomorrow. Wait, I might play a lotto tomorrow. You want to play a cheap lotto with me?
Oh, I'm definitely turning through here. Yeah, just in case.
Noob, let's play. I bought 560 tomorrow, lotto. 560 tomorrow, lotto.
That was rough, huh? Right here. Alrighty. Yeah, thank you. Have a good one. You're insane if you think I'm buying that lotto. Not a chance.
That'd probably be useless or worthless. Probably. But it might not.
What to do? I forgot that I told this guy I would give a ride from Philly tomorrow. Son of a gun. Oh, the market's closed. That makes me so sad. I do believe. This fool told me that he wanted me to pick up these guys from the Philly airport at 9 in the morning. I told him that's cool. And now he tells me it's 5:35 in the afternoon on what is the busiest evening of the summer. Sorry, bro. It ain't gonna happen unless you're willing to pay more than you want to pay. And I'm not trying to leave Philly airport at 5:30 on a Friday and be stuck in traffic.
What up?
I bought a crazy spy lotto into the close, and I think it was a mistake.
It was totally a mistake.
Yeah. We'll see, though.
Might be wrong. I've been wrong many times before, but I don't think I'm wrong this time.
When you say definitely a mistake, it makes me feel like it was actually a good play. So we'll see how it goes.
What did you do? Did you log?
Yeah. So YouTube, I'm writing up a report for. Dude, no one's even watching, dude. I'm just gonna close this.